All right, so imagine this. You've paid into Social Security your entire working life. You retire, start collecting benefits, and you think, hey, finally, I'm getting what I earned. Then April hits, and you find out Uncle Sam is taxing your Social Security. Yep, those guaranteed benefits, not so tax-free after all. In fact, nearly half of all retirees are surprised to learn that up to 85% of their Social Security could be taxed. And now, with Trump proposing to eliminate these taxes, the whole conversation is back in the spotlight.
Remember, no tax on Social Security for seniors. No tax on Social Security.
But there's a bigger story here. Because behind the scenes, Social Security Trust Fund is on track to run out by 2035. So today, we're going to break it all down. Why Social Security gets taxed, what Trump's proposal could mean, why the system feels broken, and what no one wants to admit about the future of Social Security. So let's get into it. Hey there, I'm Keith Wilson, and I am a financial advisor helping folks just like you with retirement. If you're new here, this channel's about cutting through the noise on retirement, investing, and tax planning. Today's topic, the tax trap, hiding inside your Social Security and what's coming down the road. First, let's talk about how Social Security taxes work. So if you're single and earn between $25,000 and $34,000 in retirement, up to 50% of your benefits are taxed. Over $34,000, now we're talking 85%. If you're married filing jointly, your thresholds are $32,000 to $44,000 for 50%, and $44,000 over that is going to be taxed at 85%. Now, just to be clear, you're not paying 85% in taxes. You're paying your normal income tax on up to 85% of your benefits. But still, this catches a lot of people off guard. So here's the Trump proposal. No more taxes on Social Security. In his 2024 campaign, Trump proposed eliminating federal taxes on Social Security benefits completely. That means even if your income in retirement is $150,000, $200,000, or whatever, none of your Social Security benefits would be taxable. Now, that's a bold promise, and let's be honest, it's an easy crowd pleaser. I mean, I would like that as a planner because no one likes paying taxes, especially on benefits they've been contributing to their whole life. And this is a big but. Social Security is already running out of money. You see, the Social Security Trust Fund, the reserve that helps cover payouts when payroll taxes fall short, is projected to be exhausted by 2035. So what happens then? Benefits won't go away. Don't worry about that. They won't go away entirely, but unless Congress acts, the system will only be able to pay around 77% of the promised benefits. That's a 23% automatic cut and pay for every retiree. So while eliminating taxes sounds great, doing that without replacing that lost revenue, it could actually accelerate insolvency, which brings us to the political football. You see, Social Security is the third rail of American politics. Touch it and someone gets burned, which is why politicians have kicked the can down the road for decades. Raising the full retirement age, what about that? Well, that's controversial. Raising payroll taxes, that's unpopular. Means testing, risky. Taxing benefits, even that was only supposed to affect the wealthy. But here we are. Instead of fixing the system, we've watched it become a political football, back and forth in election cycles, with no one wanting to make the hard decisions. So, how did we get here? These tax thresholds were created in 1983 and adjusted once in 1993. They've never been indexed for inflation. If they had kept up, taxes wouldn't even kick in until you're $81,000 for singles or $103,000 for married couples. But because they've stayed frozen in time, more and more retirees get pulled into the tax trap every year, even those who wouldn't have been targeted under the original design. It's a silent expansion. a stealth tax that grows without Congress ever voting on it again. Now, when this tax was first introduced under Reagan, only 10% of retirees were affected. Today, it's closer to 50%. Now, here's the real impact on retirees. Let's say a couple gets $36,000 from Social Security, pulls another $50,000 from their 401k, IRA, whatever. That puts them squarely in the 85% zone, and they'll owe taxes on most of their benefits. Now, compare that to someone who planned ahead with Roth accounts. Same lifestyle, lower tax bill, because those withdrawals don't count towards Social Security tax thresholds. And this is why retirement isn't just about saving, it's about strategy. Now, the bigger debate, fair or necessary? Critics call this a double tax. You paid into the system with already taxed dollars, and now you're getting taxed again on the way out. Doesn't seem fair. Supporters argue, well, the taxes help keep the program solvent, and removing them could cost $1.5 trillion in the next 10 years. In fact, if Trump's proposals were to pass as is, it could speed up Social Security's insolvency timeline by at least a year. So the debate becomes, is this tax an unfair burden on seniors, or is it necessary evil to keep the system running? And that's the real tension behind the headlines. So what are the fixes? What do we do about this? Here are the options being thrown around in D.C. Eliminate Social Security taxation. That's one. Index thresholds to inflation, so fewer middle-class retirees are hit. Raise payroll taxes. Not popular, but could help shore up funding. How about means testing? Reduce benefits for high earners. Push the full retirement age out further. They've already done that. Now each one has trade-offs, and every proposal has political baggage. But here's the thing. Doing nothing is also a choice, and it's the one we've made for far too long. Look, Social Security taxation is one of the least understood and most frustrating parts of retirement planning. And now with proposals flying around to eliminate those taxes entirely, it's more important than ever to understand where you stand. Here's what I want you to take away from all of this. Don't assume your benefits are tax-free. Don't wait until tax season to find out. Do some tax planning before you retire or before RMDs kick in. Because in the end, you can't control what happens in Washington, but you can control your plan. Hey, I hope this helps. Don't forget to subscribe to the channel. Would really appreciate that. Give the video a thumbs up. Helps the algorithm get this information out there, and we'll see you next time. If you like what you're seeing so far, check out this next video. Subscribe to the channel. Lord willing, we'll see you next time.